The purpose of a fib extension is to identify opposition to a large-scale trend. It can be major or minor support against a downtrend and major or minor resistance to an uptrend. Points 1, 2, and 3 are often placed at the start of what is expected to be the reversal of a previous substantial trend. Fib extensions are commonly used at the first sight of a new trend. For example, the very first higher upswing after an initial upswing has reversed a downtrend and retraced slightly, but not below the point of the first upswing. The base trend can be extended and referenced for later retracements in order to cover larger increments between extension levels in the case of steep trends that may also have larger retracements. When there are major market corrections or even crashes, it can be beneficial to cover a larger distance with the base trend and reach a further retracement for point 3 in the trend's development. Larger retracements often have smaller retracements within them. In other words, minor swing points within the trend that is the retracement. In such cases, not much is different. The absolute highest and lowest points are used for points 2 and 3 of the fib extension, while the other swing points in the retracement range are often not used. In most cases, the 1 level and the levels greater than 1 are used in fib extensions. However, levels below 1 can also be used as extension levels, especially when larger base trends and retracements are used. If the levels under 1 cover swing points, that can be a bonus to confirm the validity of the fib extension. But it is not necessary and certainly won't happen all the time. It may not even be possible in many cases where small base trends and retracements are used. Trend lines can help determine which extension levels may oppose a trend more, but they are often not useful since movement often steepens significantly after a base trend retraces. A base trend and retracement that increase volatility can often reduce the effectiveness of extension levels since price varies widely after point 3. However, it is not uncommon for single candles to cover multiple extension levels near their open, high, low, and close prices. If possible, use a larger base trend when the chart becomes more volatile. In this example, it was not possible at the time. Likewise, a base trend that starts out highly volatile can also reduce the effectiveness of fib extension levels. This is true even when the chart decreases in volatility with the retracement and beyond point 3. It is largely due to the distortion of fib proportions from the volatile start of the base trend. Using a larger base trend and retracement can help lessen the effects of distortions from greater volatility, but usually only to a limited degree. Fib retracement levels often identify the approximate areas of suitable swing points to use for points 2 and 3 of a fib extension's retracement. This can be done from various swing points that approximate retracement levels. The technique can be very useful when a chart is approaching new record highs or new record lows. Fib retracements can also identify suitable swing points for a fib extension's retracement, even if the base trend and its retracement are larger. This will, however, normally result in less precision. It is normally a situation due to large movements influenced by broader market factors. Extension levels are reused to validate later fib retracements. This can be seen with the volatile but major swing points taking place at the 0.786 and 0.236 levels after the chart eventually moved past extension levels identified on the previous charts of fib extensions. A fib retracement can often be drawn starting from the swing point at a previous extension level and have at least one level validated with swing points forming at the approximate area covered by a current retracement level and previous extension level. In this example, a fib retracement starts from the 1 level from the swing low at 86.10 that was crossed by previous fib extension levels. The same occurs with the 0.236 level at 125.77, which is also covering the approximate downswing identified by earlier fib extension levels. Whether it is a fib extension, retracement, or projection, it should be remembered. Fibonacci techniques more realistically identify approximate areas more likely to form reversals. It is unrealistic to expect fib levels of any kind to run through the exact highs and lows on a chart all the time, especially when volatility increases.